JB Cycles with update on February the 18th. So we may be starting to see a topping formation now in the S&P. Looking at my 4-week cycle down here, we see we are in the very bullish pop-up phase. However, we lost a couple of days now in the weekend, and the pop-up phase ends around in the middle of this coming week. And we have this steep trend line. It will soon be broken, probably, and then some kind of a reaction to the downside. Also, we see my 10-week cycle down here suggest we are now entering the bearish phase. So I have been looking for some kind of a top late February and some kind of low in the middle or late March. But first, let's see some context. My 3.5-year cycle. And I have put in some green and yellow fields here. We are now in the green field, the very bullish phase where my rules say shorting is forbidden. You play with high leverage, but you switch between being long and cash. Don't try shorting. And this period extends for the rest of this year. And looking back, you see the bullish phase. You may have bear markets going well into the bullish phase, all the way into where I switched the colors here. So we see the bear market low was in this transition phase in 2003. Then we see at this bull market we had a reaction to the downside. We really didn't have any clear low at this cycle low. It was more a sideways bearish phase. But we see we had correction in 2006 in this transition phase, and then it was very bullish. Here in 2010 we got tricked because there was a correction right in the transition phase. However, we had a pretty bad correction in the middle of this very bullish green phase. So it's no strict rule. We always have to be careful. And at this transition phase, well, we had a choppy sideways reaction, nothing really bearish, and then it was very bullish. And as you see, the bull market can extend further after this green phase. So in 2016 we had a reaction a little bit early before this transition phase, and then we had the COVID crash a bit early before this transition phase, but you know, this was kind of not supposed to happen. But you always have to watch out somewhere in this transition phase. You typically get, or there's a potential for a bad correction. So right now, current situation, we see the correction last fall. It was a little bit early, but that should be the correction I was looking for around this transition phase. So now the rest of this year, don't be bearish. You know, something bearish may happen, but odds don't favor it. So looking at shorter term cycles, I could start with this one, the quarterly cycle or the more dominant 6-month cycle, typically giving us corrections around March and September, like here, 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 and now a low around middle of March. We also have the 10-week cycle where we are out of phase with the ideal cycle. And I think sometime the market will get back in phase with this ideal cycle, but right now we see the lows are around this point, the mid-cycle low. And the next mid-cycle low is middle of March. And you know, it suggests there still may be some upside here, but we have 2 cycles suggesting a low around mid-March. And then again another cycle where we are out of phase, the 17-week cycle. So the ideal cycle in red, and now the shifted out of phase condition in blue. And we see this blue one has a low around early March. We see time is running out for bears. if we continue to be in this shifted phase. So all three cycles, or the shifted cycles, suggest a low is coming up. Then we have my wavelets, the S&P. So this is it looks scary. It looks like some kind of top, but it doesn't look very bearish, because if I look at this blue wavelet, we already have spent a lot of time since the wavelet topped, and we are not seeing any weakness, suggesting kind of there's something coming here to the downside, but time is kind of running out for bears, suggesting it may end up as a consolidation. But then we have this very primitive tool I have shown, putting it at the purple wavelet top, and enter your next long position at the right end of the rectangle. And so this very primitive method suggests you should stay out of market for the next 3 weeks, bringing us to around middle of March. But I said something similar early December, and then you would have missed the New Year rally. So we could just grind up to the upside here. It's also possible, but this looks like staying cash for the next couple of weeks. Something to the downside absolutely may happen. We have the VIX wavelet, the 10-week cycle in VIX. So last weekend I did not see any sign of the VIX making a low and the S&P making a top, but now the wavelet is starting to go up. So, and looking at how long is this period, it's similar to previous ones. So very possible VIX is now giving us an alert, and the projection from VIX suggests, well, here in red, it could be upside this coming week. The VIX is often a leading signal in this cycle, and VIX is now giving us a warning. A top is coming, but there still could be around one more week with upside here. And then finally, I think we have the hourly data Dow Jones. So earlier here, a couple of weeks ago, I suggested there could be a top around February the 8th, but more likely around February 22nd. And that's this coming week. We see I have my 2-week oscillation here, suggesting a top around Wednesday this coming week. Looking at my wavelets, it's not an ideal setup. I wouldn't go long here, but I wouldn't go short either. So for a better setup for going short, I would like to see us going up for a couple of days. Couple of days with upside, that would give us a selling setup. But as I said, I would be careful with shorts here. It's possible that the setups doesn't materialize and we just grind up to the upside. But on the other hand, cycles warning us into middle of March. So I think my main scenario could be a little bit more upside this coming week, and then look for some kind of a B, C pattern into middle of March. It could be bearish with a lower shoulder, a lower low, but it also turn out more sideways as a consolidation. So that's for today, and see you in the next one.